all these cards would be issued by Wirecard through their relationship with MasterCard.
But there's not like a huge difference to the way that Revolut were able to implement this service.
Hello and welcome to an episode of Homescreen. I'm Joe Colchester.
Hey, I'm Jim Safford, and this week we're going to be talking all things Wirecard. Well, not all things, just specifically about the way that the Wirecard scandal has unfolded, what's happening from the UK's perspective, what are the next steps for this, and then we're going to zoom in specifically on the case of card issuance. So how is this responding across the market, especially for Curve? So tune in for that.
So, Jim, can you tell us what's happened here? What's happened with Wirecard?
The Wirecard have been under investigation by the Financial Times for a number of years now. There's been two sort of special investigators involved in figuring out what was happening within the accounts of Wirecard and its constituent businesses. So the supposition is that they've been accused of doing something called round tripping, which is where you take a lump sum of money and then it leaves a bank which is owned by Wirecard. They own one of the banks in Munich, and then that money will then show its face in a different part of the world, only then to be moved on and sort of diversified within a different bank account until when it gets to India, the final destination, local auditors have deemed it to be kind of legitimate business revenue. So essentially moving money from one place to another in order to kind of suggest that there is money in a place where there isn't. So there's been two auditing bodies involved in what's been going on in Wirecard's case. They have their regular yearly auditors, which are Ernst & Young, another consultancy firm out there. But following the investigation by the Financial Times, KPMG were brought in to do another look at the way that their books were behaving. And that has since essentially raised a few extra concerns, which has led to the German regulator BaFin getting involved and saying that there needs to be a thorough investigation by the German state into the proceedings of Wirecard. So the FCA responded pretty quickly. They got involved with the businesses which were involved with Wirecard in the UK. And I guess we can talk about, maybe touch this, I'll touch on this a little bit later on, but essentially what the FCA have done is issued a statement which has been since been sort of reneged, which is that they need to, they place requirements on any companies using Wirecard to authorize different sort of bank behaviors. And this has led to certain different players being unable to operate over the weekend and having to implement new functions from different products. But the interesting thing that then leads on to is kind of figuring out who this directly affects. So who would you say is being directly affected by Wirecard services? The FCA issues a proclamation like this.
Yeah, so it seems like almost anyone, any fintech using the Wirecard services were at risk. And that could be whether it was the card issuing functionality or the payment processing. They all seem to be affected in different ways. So Curve, for example, were affected over the weekend, and we can look into that a bit more today, as well as many others, millions of customers actually. So Pocket, for example, Anna Money, to name just a few in the UK. So millions of customers were unable to access their money. They were assured that their money is safe, but the fact that they couldn't access that money is of huge concern. So just taking a look at Pocket, for example, it's the product is aimed to support vulnerable customers. Customers are often rejected by traditional lenders. And around 500,000 of these customers can't access or couldn't access their money. So obviously that's a huge concern, and the ramifications are still yet to be seen, but damage has been done there.
Yeah. And I guess one of the big problems is that Wirecard is not immediately obvious to people. Like, people wouldn't know what this big institution does from a consumer perspective. They only see what a Curve does, or maybe what a Pocket does, and so on. Do you think that that's a particular problem?
Yeah, I think a lot of customers as well, they don't know anything about Wirecard. They just happen to sign up to Curve or Anna Money, and the next thing they know, they've lent out this trust that they didn't know they had done to these third parties. So I think it's going to perhaps change the way in which people get products, choose products, and perhaps the products themselves.
Yeah. Well, it's been quite interesting, actually, because this is not totally unprecedented. Like, in terms of the way that people respond to third parties like Wirecard, we've seen tech providers looking to bring this sort of functionality in-house for a long time, especially when they've experienced outages from big companies like Wirecard, not being able to fulfill specific things. The supposition, I guess, is that Wirecard are a great business because they're able to allow people to get to market faster. They allow people to get access to things like banking licenses, as you mentioned before, like payment services, but also things like auditing, things like risk analysis, that kind of thing. They provide essentially like the bare bones and the structure which people would need to get to market fast. I've seen different players like Monzo and Revolut, for example, take the initiative and actually build those structures into their own platforms. Monzo, for example, has a current account license, which it would have initially relied upon Wirecard to provide a prepaid card license, for example. We've also got people like Revolut, which we can see in a little bit, who've taken the initiative in a different way. But what seems to be happening there is that different companies will use massive organizations like Wirecard in different ways. They've essentially diversified the way that they're being used by offering a lot of different services. They're kind of considered like the grandfather of business or banking as a service. So like they've been there for the longest amount of time. They've been able to leverage a lot of the trust. And so many of these new fintechs can actually owe their existence to the fact they were able to ship product quickly on their tech stacks and get out to market as a result of companies like Wirecard. So this is going to be potentially a very difficult time for new entrants into the market, and will actually make people race towards getting their own tech and their own regulatory systems built in quicker, which is something that we mentioned in our newsletter yesterday. And I'll probably like round off this final bit by talking a little bit about what would happen, what the potential outcomes would be. But if we just to like do a very quick rundown of what the different services available are within Wirecard, and you can see all this information on Wirecard's German website. They essentially offer, they have a license with big payment networks. So people like MasterCard and Visa, they require specific licenses for businesses to interact with them, to do business with them, essentially. And those, you can't just go to Visa and say, I want to do work with you. You have to go via somebody who's got the cachet and the credibility to be able to get a seat at the table. So Wirecard is one way that a fintech might do that. They also handle fraud prevention, creditworthiness checks, that sort of thing. And they also have a banking license. As I mentioned before, they have a bank which they're able to leverage and to provide like the banking license infrastructure for someone who wants to just start doing providing different functionality. So they're the three core offerings. But what they're able to do is essentially offer massive range of different things to people to get launched quickly. And they've also been there for 25 years, something like that. So they've got huge amounts of experience and, quite ironically, trust, which enables them to sort of to be respected enough to get a seat at the table with these different providers.
Right, and certainly had the edge on its competitors there due to its performance and the way that they fulfilled so many different requirements. And because the offering is so broad, it's quite a tricky question, but do you think you could point out a few competitors in the same space?
Yeah, exactly. This is where it gets really difficult because, like, for example, because it does so many different things and it's so established, there's no like one company which does all the things it does. But like if a fintech, for example, were to be smart and to see kind of where the kind of the space is for different companies to interact with them, then I think there is a few things that they could do. Like, so for example, we've seen Galileo produce an instant product, which is sort of for the card issuance side of things. So how do you actually produce cards, do it cheap, and then allow these small companies to scale? Galileo seemed to be a really, really exciting new product doing that sort of thing. All developers out there will attest to the significance of someone like Stripe with their payment processing powers. They just own this space. And then the holding of banking funds, for example, which Wirecard's got quite a complicated relationship with. It might hold a bank account with several different banks, but all of the big banks, for example, will hold actual bank accounts for these fintechs and stuff. So Barclays would be the most obvious example of that. I believe Revolut have had a relationship with Barclays whereby, so for example, they would hold in the instant the banking license and the funds, and then that would then be able to be sort of filtered through their own interfaces and things. But I guess the main thing that people can do to get around all this is to build their own stuff. There is I guess a get to market thing, which is very difficult to do, which relies upon you using services like Stripe and Galileo and Barclays and things like that. And, you know, like we've all kind of had to play around with Stripe's APIs and things. They're really usable, really easy to, you know, implement with their sandbox and stuff, and actually good fun for developers to play with. But by the time you get to like big boy numbers, when you've got your big boy trousers on, then it's definitely like time to start taking care of your own stuff, like getting banking licenses if necessary, issuing your own cards, getting your own relationships with the different card issuers like MasterCard and so on, which we've seen has been the approach that a lot of different people have taken. So that's kind of the alternatives side of things, I think.
And for the obviously smaller players who might find it a lot trickier to build in-house, at least initially, do you think that they might be disadvantaged now because there won't be as much trust, perhaps, in them if they are relying on third parties?
Yeah, potentially. I don't think it's. I think it's too early to say at the minute as to how much trust but it might lend a level of focus to different providers, like essentially saying things like, we need to be able to ship this one particular feature very quickly. So instead of going to, I guess one of the benefits of Wirecard was that it did so many things in one package rather than doing a few very small things. So essentially we might see like a scaling down of the ambitions of fintechs and saying, we're just going to stake our claim on this particular thing, and then we're just going to use Galileo for this, and we're just going to see what happens from there on.
Yeah.
It's cheap enough. They've got a really good sort of scale back plan for themselves, essentially, as in to say, with this instant product, they're essentially saying, we don't want to play in the sort of like the large scale sort of activities that the fintechs want to play in eventually. We anticipate that they're going to build that stuff in-house, but we're here to support them through the earlier stages and to, you know, to skim the fat off it and take our own benefits from it. So I think from a trust perspective, potentially, from the regulators' perspective as well, like I guess there's definitely a bit of fear from their perspective. Should they have been as willing to allow these companies to launch products without their own current account licenses, for example, or without different relationships? It used to be very difficult for people to get into banking. It became quite easy after 2008 and after the Eurozone crisis. They introduced a lot more flexibility in the way that people were able to get into the banking market. But maybe we're starting to see a rollback from a regulatory perspective. You know, do these companies now need to be providing much more regulatory, like providing more due diligence from a regulatory perspective in order to be considered worthy of all of these different financial products?
Right.
So
yeah.
I think it's a good question. An interesting one will be to see how the FCA and other industries like that respond to it.
Yeah, for sure. And I think what's been particularly worrying to a lot of people, it was a FD investigation that initially prompted this. The regulators themselves didn't find it initially. or didn't flag it initially. So I think I think eyes are kind of turning on them as well.
Yeah, I guess the FT, it highlights the value of investigative journalism from my perspective, doesn't it? Because these guys had the time and the space to do the regulation. Realistically, it should have been EY that was flagging all of these concerns, but it wasn't. You can't rely upon auditing firms to necessarily be able to put in the legwork, especially if they're being sold at the highest, to the highest bidder and so on. Like, Wirecard would have just gone to a different auditor. So like, it's the job of these different organizations, I guess, to be accountable. But great news that someone like the FT was on hand to really put in the legwork and go after this stuff. So a win for the investigative journalist trade, I guess, but also a sad time that it's resulted in that. But you have to expect that.
It's quite interesting in the sense that because Curve around the 28th of April changed their T&Cs following the KPMG audit and decided to take their card issuing in-house. That's a process though, it's not a sudden switch. And I think that the day that the switch was due to be complete was the 28th. So just after the suspensions were put in place. So Curve users did suffer from the Curve suspensions, and they're all back up and running now. But that's the one we're going to focus on now.
But they've moved over to checkout.com, haven't they, as to handle those different.
So for the card processing, it's in-house. But for the as you say, the payment processing, they've relied on checkout.com in quite a swift move. So they were working hard over the weekend. I'm not sure if that was already in place, but it's certainly probably saved their users a lot of concern.
Yeah, cool. So we'll just I guess have a look through the journey to start with, just to get a feel for the types of things that these services actually allow people to do.
So we've got the onboarding for the Curve card, Curve account that is. So you can see there the users putting in their personal information. It's actually a very nice journey. But we're going to cover the choosing of the card. So during this point, all these cards would be issued by Wirecard through their relationship with MasterCard. And as you can see here, you can select your cards from here. Seeing the different features.
And as you said there, this is Wirecard. This is MasterCard via Wirecard. So Wirecard here will have the relationship with MasterCard, and then Curve will go via Wirecard for that.
But going forward, this will all be taken in-house, and hopefully it won't have any effect on the UX of this, all the products that they offer.
We wouldn't imagine so, would we?
No.
It shouldn't really. In fact, it should probably give them more control over the flow.
Yeah, exactly.
Wirecard, for example, will have certain regulatory requirements. One of the things that's really interesting from my perspective, when we did see like those T's and C's, and I'm not sure if we'll be able to whack them up on the screen so you can see a direct comparison between them. But essentially, like the T's and C's were able to, on the one hand, were super formalistic, and we're able to sort of like talk in really legalistic terms about what Curve does, and then we see like this change or this shift in tone of voice after the 28th of April when these new essential documents are released, which said along the lines of we're Curve, we're smiley and happy, and we're not legalistic anymore, and all this kind of stuff. So like there's definitely a shift in the way that like sort of products and companies can interact when they like sort of like stop relying upon different people and their terms and conditions potentially. But that was an interesting and possibly a little nuanced understanding of the way that like this kind of thing should impact the product. As you can see there from the journey, like nothing is really impacted. It's just the ability to issue and generate cards, I guess.
Yeah, definitely. And I think, as you mentioned, the TNCs, but also subsequent comms is that you can be a lot more authoritative. You fully own your product. Therefore, when you're communicating, you're not relying on third parties or the news of other organizations. So I think it gives you a lot more control.
Yeah. And you mentioned there that Curve worked over the weekend to do this sort of thing, and it was sort of like a really big deal. what was the do you get like the impression that this is, that they managed to avoid like the worst of it, or did they have it pretty easy in comparison? What's the scale of risk there?
Yeah, I think they have avoided the worst of it. It's hard to say what the scale of the damage will be, but I think the disruption that it's caused its users, I think will kind of raise the alarm for users and other fintechs who outsource these types of services, because it could have been worse. But the fact that it happened is certainly enough to spur some movements.
Yeah, really, really fascinating, isn't it? Because like, if we think about like what we've learned from the Curve experience, it's that this could have, like, they've essentially been preparing for this for the past 2 months in a way. You know, since that audit from KPMG, they've said we're going to put in place a new system and it's going to change the way that we do things. There are certain players out there who potentially haven't been preparing in the same way, or maybe we're reliant on other parts of Wirecard's business in order to help them to do stuff. So it would be, I guess, Curve is an example of a company which was able to move fast and is also able to probably like mitigate the risk by using a different service like checkout.com, which seems to be an absolute rocket ship at the minute. It seems to be absolutely flying. A great example of a business which is able to sneak into the kind of the hole or the vacuum left by someone like Wirecard and pick up business. Like we were mentioning before, if Wirecard does 4 things very well, then if it falls out, then that's space for 4 different types of companies to go in and essentially own the particular niche that a lot of business for a lot of companies essentially.
I think that the technology that Wirecard was using for whether it's payment processing or card issuing worked very well, and have been performing well. It's just the other allegations where the issues lie. So those could be up for sale as well, for other companies to take in-house. Revolut, whilst they've taken card issuing in-house, could still bring that in, for example, when it comes to payment processing. So there's been a little bit of discussion about whether Revolut might actually acquire some of the technology.
From that point of view, Revolut is a good example of a company which has moved away from, as you mentioned, certain parts of Wirecard's stack. So let's check that out now. Yeah,
so we've got here the upgrading to Revolut Premium. Revolut do upgrade journeys particularly well, whether it's the graphics on the card or just the customization. It's really, really nice and smooth. So this is all brought in-house, the card issuing, so they have got a direct relationship with Visa.
This shouldn't really have that much of an impact on the UI. Then they have control over the flow and they have control over the language that they speak to their customers with, maybe the risk appetite that they're willing to engage with. But there's not like a huge difference to the way that Revolut were able to implement this service than maybe they would do if they were still using Wirecard. One of the things I think we focus on a lot at Pulse is potentially the way that user interfaces are affected by different technologies, by regulations and that sort of thing, but also how UX works from a fluid perspective. How do people design experiences which are joyous, and how are those affected by different parts of the regulatory environment, the technical equipment that they're using, and so on. One of the fascinating things about like something like Wirecard, and we touched on this at the beginning, is that this is essentially a service which doesn't touch the experience. People wouldn't even know that Wirecard's a thing, without kind of being in the know essentially. But it's a huge part of the trust mechanism. Happens only when the product doesn't work anymore, and a lot of companies were just experiencing outages, irregularities in the performance, and so have decided to bring that experience in-house. Revolut being a good example of that, because they've been able to now, as a result of their scale and size, go directly to Visa and MasterCard and say, we want a relationship with you as a card issuer. And whilst they would traditionally have had to go directly via an intermediary like Wirecard, they can now do that directly themselves.
Yeah, and we'll be relieved now that they made that decision, for sure.
It seems to be the direction of travel, that a lot of companies seem to be going in. We need these services essentially to help us launch, but once we're there, let's get rid of them, sack off certain bits.
It's interesting in a way how similar the two journeys are. One is onboarding and one's upgrading, but I think that I think Curve maybe borrowed a little bit from Revolut there, which is a good idea. But it just goes to show that you can get that kind of UX and UI when you're relying on a third party. It's just and outsourcing it. It's just the subsequent problems that you might find.
Yeah, the technical outages, that kind of thing. Like I remember, I don't know if you remember this, but like a few years ago, back when all of the different tech companies were struggling with outages from third parties, it was just like every single day there'd be a new message saying, make sure you carry a different cards with you today, or something like that. They'd essentially say, you might not be able to use this at some point today, which would get very tiresome. And ultimately, that's the thing which is going to break down trust in your product is, does it work or not? And if it doesn't, then that's kind of the deal breaker, especially during a Saturday or a Sunday, when people want to be out on the parks, having their socially distanced beers from the pub and that kind of stuff. If you can't pay, then, doesn't matter how good your UI is. There's going to be a fair amount of content coming out this week around this from different parts of 11FS. Well, it'll probably already be out by that time. But essentially, we're going to be talking this week about the various ways that Wirecard's business is being affecting different fintechs around the world. So, of course, there are certain businesses which are using specific parts of it. Anna Money, we've just touched on. They're offering a business banking account, which sort of depends on wireless to process payments, which makes it really complicated. There are companies like Joe alluded to at the top, like Pocket, which are trying to do a really decent thing, providing funding which wouldn't necessarily be available to the unbanked. And so off the back of that, off the weekend's activities, the FCA saying that all activities need to stop. There has been a lot of different types of company affected by it. Those who are using Wirecard's banking license, those that are using their payment processing tools, those that are using their card issuance tools, a whole host. We've focused specifically on the card issuing side of things today, just for the sake of brevity, but there's going to be a whole heap of extra stuff about all the other stuff. So tune in for that. So thank you to Joe for coming on this week. We wrote a newsletter about this, so if you see that in your inboxes, be sure to check it out. If you want to hear a little bit more about Pulse, the platform that underlies this show, then head over to pulse.11fs.com. That's essentially a repository of all the different digital banking experiences we've been gathering over the years. It'll show you how stuff's being built, what all the cool things are out there, and what your competitors are doing. You can also find us on Twitter at 11FSPulse. You can find me lingering on Twitter somewhere. I'm not sure where Joe likes to lurk. Probably LinkedIn. LinkedIn. But we'll see you next week for another episode.